Uh, in this class, I'll be your facilitator for taxation. My name is Abdul'Ghaniyy, and in this class, we shall be discussing taxation all through. We are starting with Introduction to Taxation, where we shall discuss the objectives and purposes of taxation, also the history of taxation, the multiple of taxation, as well as the principles and canons of taxation. After that, we shall discuss the administration of taxation in Nigeria, starting from the Federal Inland Revenue Service, the Joint Tax Board, and the State Inland Revenue Service, and the local government tax administrator. Okay, so after that, we shall also discuss the returns and filing process and procedures. Okay, so how do you file your tax returns with the appropriate inland revenue service? Okay, so followed by the determination of residence. So because of the movements of people from one area to another, take for instance, you might be an Ogun State resident and you are working in Lagos State. Okay, so if you are to pay your pay as you earn taxes, so which of these states do you remit your payee returns to? Okay, so the principles of residence applies in this instance. Okay, so when we get there, we discuss more better. And also we shall be discussing the reliefs and allowances applicable to taxpayer, the reliefs and allowances applicable or available to taxpayers, be it the company, okay, or an individual. Okay, so for companies, we have capital allowances, we have loss reliefs and the likes. And also we shall be discussing the taxation of employment income, that's your personal income, pay as you earn, as well as the taxation of a sole trader or self-employed individuals, okay, which also falls under the Personal Income Tax Act, as well as the taxation of partnership income. These three categories of income, employment income, self-employed, and partnership income, falls under the categories of Personal Income Tax Act. Okay, so prior to the amendment of CAMA, that's the Companies and Allied Matters Act of 2020, there's nothing like partnership, limited liability partnership. Okay, but in the CAMA of 2020, we now have limited liability partnership. Okay, so so the limited liability partnership will be governed by the Company Income Tax Act. And in this class as well, we shall be discussing settlements, trusts, and estates. That is the taxation of a settlement, trust, and estate, okay, of a deceased. Also, we shall be discussing taxation of investment income. Okay, so where an individual or companies have investments other than their primary business activities, we usually call that in tax as what as a secondary investment. Okay, or ancillary investment income. Okay, so where a company or an individual has an investment income other than its primary business objective. Okay, so as well in this class we shall be discussing ascertainment of companies' profits, losses. We are going to take it from how do you get your basis, your basis period. Okay, then we run through the adjustable profit, the adjusted profit, accessible income, and the likes. Okay, so we shall also discuss how you offset your withholding taxes with how you offset your company income tax with your withholding tax. Okay, and as well as the capital allowances, on relief losses brought forward, your balancing charge and balancing allowance. Are we together? Okay, so also we shall be discussing accounting for taxes, where we will be discussing IAS 12, that's your deferred income taxes, under which we have your company income tax and deferred tax. Okay, where you have your income tax and deferred tax. Are we together? So also we shall be discussing the tertiary education tax under what? under the Tertiary Education Tax Act. Then as well as the taxation of specialized companies such as companies in the agricultural sector, companies in the aviation industry, companies into transportation and the likes. We shall also be discussing withholding taxes, value-added tax, stamp duties, and that's so. In all, we are looking towards 22 chapters. Okay, so in today's class, we shall be discussing Introduction to Taxation. Introduction to Taxation. Okay, now we are starting the class with the definitions of tax. Okay, so we have a lot of definition of tax. It depends on your perspective. Okay, so the way and manner each individual or company or author defines tax. So but basically the objective of tax, or the key terms or the keywords that must be considered when defining your tax is that tax is a levy or an amount or money paid to the government. So you underline the keyword paid to the government. Okay, so it's not an amount or a fee or a levy payable to an individual or payable to a company. Okay, so it is paid to the government. Okay, so and for what purpose? Why must I pay to the government? Why must I pay government? Okay, so you are paying government for the purpose of what? For the purpose of government achieving its objective. Okay, so government is collecting this levy, these taxes, in order to finance public facilities. Okay, so you pay taxes to government for what? Because indirectly you are paying for public service. Okay, indirectly by paying taxes you are paying for public service. Okay, though the collection of taxes from individual or companies does not directly impose it on government to give back to the society. Okay, but it's just an avenue for government to raise revenue, to raise fund in order to provide public facilities to the public. Okay, so the Oxford Advanced Learners Dictionary defines tax as the money that has to be paid to the government so that it can pay for public services, while in the Black Law Dictionary it was defined as a monetary charge imposed by the government. You can see the keywords are not missing. Okay, in the first definition we have it as paid to the government. In the Black Law Dictionary we have it as imposed by the government on persons, entities or property levied to yield public revenue. Okay, so these are the basic keywords in the definition of tax: payable to the government or imposed by the government, and for what purpose? In order to yield public revenue or to pay for public services. So simply put, tax is a compulsory contribution levied by a sovereign power on the incomes, profits, goods, services or properties of individuals and corporate persons, trust and settlements. Okay, so these are the elements on which taxes are imposed. Okay, so these are the subjects of taxes. Okay, these are the subjects of taxes. So such taxes, when collected, are used for carrying out governmental functions such as maintenance of law and order, provision of infrastructure such as road, health facilities, education, so many more. Okay, so borrowing from the magnum opus of Chris Whitehouse and Elizabeth Stuart Bottle, tax has three basic features. Has three basic features, and what are they? One, we have a compulsory levy. A compulsory levy imposed by imposed by government. One, is a compulsory levy. Okay, 2 imposed by what? Imposed by the government. Okay, imposed by the government or local authority, and for what? For public purpose, to encourage what? To encourage social justice. For public purpose, to encourage social what? To encourage social justice. Are we together? Okay. So the authors admitted that to describe the main features of a tax is not, however, to define the concepts, but it's just what? It's just that tax is a voluntary payment. Okay, it's a voluntary payment, but which is compulsory in nature. Okay, and the burden is placed on what? On taxpayers for the good of the society. Okay, so indirectly, government facilities are not what? Are not free. The use of government facilities are not what? Are not free. They are what? They are being paid for indirectly. Are we together? So in conclusion, tax is described as a form of levy imposed on all residents living in as well as non-residents doing business within a tax jurisdiction. Yeah, it is arguably that what? Why should a non-resident pay taxes in a country where he or she does not reside or lives within? Okay, yeah, you pay tax in a country where you are a non-resident when your income is being derived or obtained, okay, or received in that what? In that jurisdiction. If you received an income or you are being paid in a country, or you derive the income from that country, or the income or profit is what arises from what? From that particular country. Are we together? Okay, so in this instance, it is what? It is mandatory, it is compulsory that you pay taxes on such, to the extent of that profit or income derivable from that jurisdiction. Are we together? Okay, so it is a civic and patriotic responsibility of citizens to pay taxes imposed, which also come to the government as income or revenue yielding device to finance the provisions of socio-economic and infrastructural amenities, and also to enhance industrial efficiency. Lastly, taxation could be defined as the process of levying and collection of tax from taxpayers. Okay, the process or the act of collecting taxes from what? From taxpayer is what? Is a taxation. Now let's move to objectives and purposes of taxation. Why should government collect taxes, or why should companies or individuals pay taxes? Okay, so throughout the world, the primary objective and purpose of taxation is essentially to generate revenue or raise money for government expenditure on social welfare. Okay, we all agree that all governments, irrespective of where you are in the world, the primary purpose of a government is what? Is to cater for the social welfare of its citizen, right? Okay, so the use of taxation as an instrument of economic regulation or control for the purpose of discouraging certain forms of antisocial behavior is also discernible from tax legislation in this century. It is very, very, very important. Okay, so it has been stated that the importance of taxation lies primarily in its ability to raise capital for the public sector for the development and growth of the economy, and also in assisting the regulation of the consumption pattern, resulting in economic stabilization and effective redistribution of income. Are we together? Okay. For the purpose of what? For the purpose of the central government or federal government, as the case may be, one is to what? Is to cater for the social welfareism of its citizen. Secondly, is to what? Is to develop the what? To develop the nation, to develop the country. So to contribute to the infrastructure development, to enable to finance. Okay, to finance what? To finance our public expenditure. Okay, so early this year, the Federal Inland Revenue Service said it was able to achieve 99%, to meet 99% of its budget. Okay, to meet 99% of its budget. So that's that's a progressive report. Okay, that's a good report. And in return, what that means is that yes, there should be money for government to share. There should be money for government to spend on on public facilities or public amenities. So it is the responsibility of the government to cater for the social welfareism of all citizens in its jurisdiction. Now let's take the objectives one after the other. Okay, so the objectives to consider when designing a tax policy include: 1, revenue generation. Okay, revenue generation. Like I said earlier, that the primary objective of taxation is to raise money to meet government expenditure. Underline that keyword: raise money to meet government expenditure. Are we together? So taxation has always been employed to raise sufficient revenue to satisfy the needs of the government, such as in the provision of services like defense, law and order, health services and education. Okay, revenue from taxation can also be spent on capital projects, otherwise called capital expenditure, creating a social and economic infrastructure which will improve the social life of the people and also enable the economy of the country to grow. In practice, the collection of taxes is not a play game. Okay, so because each of the government agency, at the federal level we have the Federal Inland Revenue Service, at the state level we have the State Inland Revenue Service, and the local government level we have the local government tax administrator. The way and manner of which they go after taxpayers, both companies and individual, is very is nothing to talk about. Why? Because they have their targets, they have a budget. So now these agencies are now operating like a private sector. They are operating like a profit center, okay, on which their performance will be measured based on what? Based on their results. Okay, so they are looking for all ways to ensure that they maximize their revenue generation. Are we together? Because if you cannot perform, the outcome of that is that you have an option. Is either you go or what, or you improve your performance. So why are they intense in carrying out or in discharging their duties? Okay, the reason being that government needs money. Government needs money to finance its public expenditure. Are we together? So another objective to consider is the redistribution of income and wealth. The redistribution of income and wealth. This can be looked at from two angles. Okay, the first one is the doctrine that taxation should be based on the ability to pay. Okay, so if you have the ability to pay, yes, your income should be subject to tax. And where you don't have that such capability, then you should be mandated to pay what? You should not be mandated to pay tax. Okay, so why should taxation be based on ability to pay? Okay, yes, the reason is that the tax burden or the burden of taxation ought to be heavier for rich men than for the poor. Okay, so with the taxes collected being used to pay for social services for the less fortunate, this is achieved by the gradation or progressiveness of the rate at which the taxes are levied. Okay, for instance, under Personal Income Tax, Act, we have the graduated rates for individuals or partners in a partnership business. The graduated rate is what? For the first 300,000, for the first 300,000, Okay, so we have it at what? We have it at 7%. Then the next 300,000, we have it at what? We have it at 11%. And then the next 500,000, we have it at 15%. And the next 500,000, we have it at 19%. Then the next 1,600,000, we have it at 21%. And the last, or above, anything above 3.2 million naira, we have it at 24%. Altogether. Okay, what's the implication of this graduated rates? The implication of this graduated rates is that what? Is that the higher you earn, the higher tax you pay. Okay, the higher you earn, the higher tax you pay, which we can all agree that is in line with the redistribution, with the redistribution of income and wealth. Are we together? Okay, now let's go back to our notes. Another objective or purpose of taxation is the management of the economy. Okay, the management of the economy. Taxation is important in the planning of savings and investments, and by harmonizing it with development strategy and changing economic structure. Okay, so the government can use taxation as a powerful fiscal weapon to plan and develop a country. Okay, it can be used as a powerful fiscal weapon to plan and develop a country. Okay, so take for instance, in the Finance Act of 2020, okay, in the Finance Act of 2020, there's an amendment. Okay, there's an amendment to the CAMA. Okay, and this amendment states that any unclaimed funds, okay, for a period of 6 years, okay, shall be transferred, okay, shall be transferred to the established unclaimed funds trust fund, UFTF, established by what? By the, that shall be established. Okay, now what's the purpose of this UFTF? Okay, the purpose of this is for government to borrow, to enable government to borrow from what? From unclaimed funds, okay, in the private sector, or invested by private sector in the Security Exchange Commission. Are we together? Okay, so government will borrow this money for a maximum period of what? Of 6 years, we shall be repaid when claimable by the owners. Okay, we shall be repaid within by after 6 years to owners of those to owners of those funds. Okay, so what's the motive? What's the objective? What's the purpose of establishing this fund? Okay, the purpose of establishing this fund is for government to reduce its debt, its external debt. Okay, it's for government to reduce its external debt. Okay, you know that for the past 2 or 3 years, the debt management, okay, or the debt ratio of Nigeria compared to other countries in Africa is very, very, very high. Okay, is not encouraging. We keep incurring debt for the purpose of what? In order to finance public expenditure, like the railway projects and the likes. Okay, so for government to reduce, or in order to plan its finance, its expenditure, and for the government to have a savings. Okay, that's why this type of fund was introduced. Okay, so a tax system can provide the government with effective and flexible instruments for the day-to-day management of the economy. Okay, so consequently, taxation can be used to achieve specific economic objectives of a nation. It can also be designed in such a way as to direct private investment in line with national needs and priorities. Yes, I also make reference to the Finance Act of 2019 and 2020 respectively. Okay, there are a lot of incentives introduced in these two acts. Okay, yes, this is as a is part of what of the progressive amendments or progressive tax reforms of the government. Okay, it's part of the progressive tax reforms of government. Now, prior to the amendment, for companies operating in real estate, okay, it seems that investment in real estate is not encouraging. Investment in real estate is not encouraging investors to that it's not bringing investors to that particular sector of the economy. Okay, so now the government looked at it and come out with an opinion that now let's introduce incentives to this particular sector. Let's introduce incentives to this sector so that we can boost the level of investment in this industry, the capital investment in this industry, so that it can encourage investors out there. Okay, so that's one. Another one is that for small companies that are thriving, companies that are crawling, that are finding it difficult to achieve their primary purpose of establishment. Now, government introduced an incentive that for all businesses, for all companies that their revenue threshold is below 25 million, that their revenue is below 25 million, they are all exempted from the payment of company income tax. Yes, this is quite good. It's good enough. Okay, so that is, we are giving you an incentive. Go out there, go and operate your business. In as much that your turnover does not above the threshold of 25 million, you are exempted from the payment of Company Income Tax Act. Likewise, consequently, the Finance Act of 2020 also exempt the payment of tertiary education tax by small companies. Okay, so it exempts small companies from the payment of tertiary education tax. So these are an incentives, especially in this time where there's economic downturn, there's recession in the country. Are we together? So another objective is the harmonization of economic objectives. Okay, so harmonization of diverse trade or economic objectives of different countries can be achieved through a good tax system. For example, tax system can be employed by member states of the Economic Committee of West African States, ECOWAS, so as to achieve the philosophy of the single market, free movement of people and goods within the region. Yes, this is a good one. In fact, recently, in July 2019, Nigeria signed into join other nations in Africa to sign the African Continental Free Trade Agreement. Okay, so the process started as far back as 2012, when 22 out of 55 countries initially signed the agreements. By 2016, 44 countries had signed, and in 2019, Nigeria was among the 11 countries that joined the African Continental Free Trade Agreement. Okay, and also as we speak, okay, as of December 2020, out of 55 countries, about 54 countries out of 55 had signed the African Continental Free Trade agreements, okay, which is referred to as after. Sorry. Okay. It refers to as after the African Continental Free Trade, okay, agreements are all together. So what's the objective? One of the objectives of these agreements is to enable free movement for these for Africa for these member countries to use one currency, okay, one currency to trade among member countries, okay. So to ease international trade or inter-countries trading are together. So there will be free labor, okay. So if you are a citizen of Nigeria and you feel like, oh, you are not satisfied with what you are earning in Nigeria, or it's like Dangote in Liberia or in Libya is paying than Dangote in Nigeria. Yeah, you have your international passport with you, okay. You can move anywhere. You can move to anywhere in Africa without any conditions, okay, without any barriers. Are we together? Okay, so that's the purpose of taxation. Okay, that's one of the objectives of taxation for you. Now let's move to types of taxes and tax system. The structure of Nigerian tax system basically deals with classification of and types of taxes. However, Nigerian taxes can be classified in any of the following ways. One, we have the proportional, progressive, and regressive taxes method, and also we have the incidence tax, which are the direct and indirect taxes. Okay, now let's look at each of these type of taxes one after the other. Okay, we shall start with the proportional tax. This form of tax assesses a taxpayer to tax at a flat rate on his total assessable income. Therefore, the tax payable is proportional to the taxpayer's income. For instance, at a flat rate of 20%, a taxpayer with total assessable income of 100,000 will pay tax of 20,000, while a taxpayer with income of 1 million pays tax of 200,000. So, a good example of this is our company income tax. Okay, our company income tax. So, company income tax is payable at at rates of 30% prior to the signing of the Finance Act of 2019. However, in the Finance Act of 2019, companies are now subclassified into three. Okay, three class of companies. Okay, for tax purposes. Are we together? Okay, so one, we have the large company. We have the large companies. Okay, so these are companies with turnover, okay, of 100 million and above. These are companies with turnover of 100 million and above. Then we have the medium-sized company. Okay, so these are companies with revenue threshold of within 25 million to 100 million. Are we together? These are companies with revenue threshold of 25 million to 100 million. While we also have the small company. The small companies, these are companies with revenue threshold of 0 to 25 million. Okay, so the proportional tax, using the company income tax as an example, okay, under the Finance Act of 2019 and 2020 respectively, now companies with revenue threshold of 100 million and above pays their company income tax at a rate of 30%. Okay, while medium-sized companies pays their taxes at the rate of 20%, while our small companies pay what? Pay tax at 0%. That is, they are now what? Exempted from the payment of company income tax. Okay, so that's a good example of a proportional tax system. Okay, now let's move to the progressive tax system. Okay, under our progressive tax system, a good example is what is the personal income tax for individuals or business enterprise or partners in a what? In a partnership agreement altogether. So this form of tax is a graduated rate as it applies higher rates of tax as income increases. For instance, the progressive tax concept can be explained using the current personal income tax table as follows. Like I demonstrated earlier, we also have it here as the first 300,000 that is what is chargeable at the rate of what? At the rate of 7%. Then the next 300 we have 11%, and then followed by the next 500 where we have at 50%, and the next 500 at 19%, and the any income over 1.6 million is chargeable at 21%, and any income above 3.2 million is chargeable at 24%. Now let's practicalize this. Okay, so because the way we arrive or compute this in practice is quite different from the way and manner we have it here. Okay, so these rates are not just applied straight away on what? On these stated amounts. Okay, so is on a progressive basis. Okay, so I will use an example. You are writing you have just been employed by a company, and in your employment letter you have the following. Okay, in your employment letter you have the following. 1, the basic salary. You shall be entitled to a basic salary of what? Of 1 million naira. A basic salary of what? Of 1 million naira. So that's the first note. Okay, your basic salary. So your basic salary in this case is the what? Is your gross basic salary. Okay, so you have it as 1 million naira. Then your transport allowance. You shall be entitled to transport allowance of a cumulative sum of what? Of 500,000. That's your annual transport allowance. Then you have you shall also be entitled to housing allowance. Okay, of a fee, of annual fee of what? Of 500,000 naira. Then you have your other allowances. Other allowances at what? At 1 million naira. Okay, so now if you are asked to state your gross income in this case is the addition or the total of what? Of all your income. Okay, so starting from the basic salary to transport, housing, then other allowances. So here in our example, in total we have what? We have 3 million naira. Okay, so your annual gross income is what? Is 3 million naira. Okay, so if you are to apply the progressive tax system, okay, if you are to apply the progressive tax system, then you compute as follows. You compute as follows. Now, in line with the Personal Income Tax Act, we have our consolidated relief allowance. Okay, so yeah, we are not going to deep much into this aspect, but for the purpose of illustration, okay, we demonstrate that partially. Okay, so our CRF, we have 200,000 plus 20% of my what? Of my gross income. Okay, so then I have my pension at what? At 8%. Okay, so my pension is on what? Is on the total of my basic salary, transport, and housing. Okay, so which in total I have 2 million naira. Okay, then after that I arrive at what? I arrive at my total reliefs. Okay, so in this case my total reliefs is the addition of what? Is the addition of my CRA, then my pension. Okay, addition of what? Addition of my CRA and my pension. So 20% of my gross income is 600,000 in this case. Okay, plus 200,000, that is 800,000. Then 8% of my 2 million, that should give me that is 160,000. Okay, that's 160,000. In total, my total reliefs, I have what? I have 960,000 naira. Okay, so now I have my taxable income as, my taxable income is 3 million less 960. Okay, in that case I have 2,040,000 naira. Okay, so now in applying my personal income tax, my first 300,000 out of this taxable income will be what? Will be chargeable at what? At 7%. Okay, so first 300,000 at 7%, I have what? I have 21,000 naira. Then the next 300,000 at 11%, I have 33,000 naira. Okay, then the next 500,000 at 15%, I have 75,000 naira. Okay, and so why aggregating this? Okay, I compare it with what? I compare the aggregate, okay, with what? With the taxable income. So when I reach the what? When the aggregate in total reaches what? Reaches 2,040,000 naira. Okay, so then I determine the rate, the applicable rate. Okay, so take for instance, in this case we have taken the first 300,000, the next, so that's 600 in aggregate. Then we have also taken the next 500,000. So in aggregate we have what? We have taken 1.1 million out of what? Out of 2,040,000 naira. Okay, so if you are also to consider the next 500,000 in this case, making it what? Making it 1.6 million at what? At 19%. Okay, so that should be 95,000 naira. You can punch your calculator to confirm the figure. Okay, so in that case I have taken 1.6 out of what? Out of 2,040,000 naira. So the next table is what? The next rate on the table is anything above 1.6 million. The applicable rate is what? Is at 21%. Okay, now do I apply 21% straight away on 1.6 million? In this case the answer is no. Why? If I should aggregate the first 300, next 300, 500, 500 and 600, I have 3.2 million in total, and in this case my taxable income is now up to 3.2 million. So the difference between the first 1.6 million and what? And this 2,040,000 will what? Will be chargeable at what? At 21%. Are we together? Will be chargeable at 21%. So in this case I have 2,040,000 less what? Less 1.6 million. I have 440,000 at 21%. Okay, so if I apply 21% on what? On 440,000, that should give you 80 something thousand. Okay, so punch your calculator to arrive at that figure. Then you sum up what? 21,000, 33,000, 75, 95 plus the figure you arrive at. Then you arrive. That's your what? That's your tax payable. Okay, we call it annual tax payable. okay, so which will then be what divided by the number of months you have in the year. Okay, so that's just a practical illustration of the progressive tax system. Okay, so we also have the regressive tax system. Under this type of tax, the tax payable decreases as the taxpayer's income increases. So this type of tax is not commonly applied. It's not what is not commonly applied, because it is seen as what as the other side of what of the purpose, or it's not in line with what with the principles or the canons of what of taxation. Okay, under the principle of what the principle of equity and fairness. Okay, why should I pay less taxes? Why should I pay what lesser tax as when my income is what when my income is increasing, and why should I have to pay more taxes when I'm earning low? Okay, so this is not in conformity with the with the principles of taxation. Are we together? So now under the incidence tax system, we have the direct tax. Okay, so this form of tax is assessable directly on the taxpayer, who is required to pay tax on his property, income, or profit, etc. Okay, so what are the taxes that falls under this category? One, we have the personal income tax, we have the company's income tax, and we have the capital gains tax, likewise the tertiary education tax, as well as the petroleum profits tax. Okay, so these are the taxes under direct tax. That is, they are paid directly to the government agency, or they are paid directly to the government on what by the taxpayer. Okay, so the burden are on the taxpayer, not on who is not on the final consumer, under as we have it under indirect taxes. Okay, so now under incidence tax system, the other type of tax we have here is the indirect taxes. Okay, indirect taxes are those which are imposed on commodities before they reach the consumer, and are paid by those upon whom they ultimately fall, not as taxes but as part of the selling price of the commodity. Yeah, unlike the direct taxes, which are chargeable directly on the property or income of an individual or companies. Okay, under indirect taxes, the subject of this matter, or the subject of tax in this case, is the commodity, the services. Okay, not on the taxpayer directly. So it is a tax that is paid indirectly by the beneficiary, or the final consumer. Okay, so an examples include the value added tax, stamp duties, excise duties, custom duties, and the likes. Okay, so this may affect the cost of living as they constitute taxation on expenditure. Yeah, this type of taxes are allowable under your statement of profit or loss. Okay, in fact, in most cases they are being factored under your cost of sales. Okay, they are considered under your cost of sales, because they form part of the cost incurred for the purpose of making sales. Are we together? So now let's go to basic concepts in taxation. What are the basic concepts of taxation? Okay, now in this class we shall be looking at some basic concepts in taxation, which will assist us to have a better understanding of what taxation is all about. Okay, and some of which are: one, we have the tax base. Okay, now this is a measure upon which the assessment or determination of tax liability is based. Okay, that is, it is that portion of a taxpayer's income or property which is expected to suffer tax. Yeah, a good illustration of this. Let's use our last illustration under personal income tax. Okay, now in this our example, the total gross income for this individual is 3 million naira. However, not the taxpayer or the individual is not paying taxes on the whole 3 million naira. Okay, so there are some incentives introduced by the government in order to ease the affairs of the individual, or to ease the burden of taxes on that individual. Okay, so out of 3,960,000 naira has been taken as a relief, has been given to the individual as relief, that Oga, take 960,000 naira out of your gross income for this year and pay tax on what? On 2,040,000, that is the net. Okay, now if you are paying tax on the net, you are not applying a proportional rate on what? On this taxable income. Okay, so let's make it a graduated rate. Okay, your first 300,000 earned during that year, you pay this rate. Your next, you pay this rate. Your next, you pay this rate. Okay, so till what? You exhaust the total taxable income. So likewise, under the company income tax, okay, so the accounting profit is quite different from what? It's quite different from the taxable profit. Okay, so for the purpose of taxation, afterwards, after arriving at your accounting profit for accounting purpose, then you adjust for what? You adjust for all your allowable and disallowable expenses. Okay, you adjust for all your allowable and disallowable expenses, such as depreciation, penalties, and the likes. Okay, so having done that, then you arrive at your adjusted profit. Okay, so on this adjusted profit, you pay your what? You pay education tax at 2%. Okay, then after that, the government also allows for some reliefs. Okay, government allows for some reliefs, such as what? Such as unrelieved losses from prior year. Okay, you can offset your unrelieved losses from prior year from the profit for the year, that is the adjusted profit, to the extent of losses incurred in the prior year. Okay, so in as much as the profit incurred in prior year, it does not exceed the 2/3 of the profit for this particular year. That's the number one relief. Then the other relief we have is what? Is the balancing charge. Okay, so when you have your balancing charge, you add it back, and when you have your balance allowance, you deduct. Okay, so also we have the capital allowance. Okay, so we have what? One. Sorry, let me pick my pen. One, we have unrelieved losses. Two, we have the balancing charge. Three, we have the capital what? We have the capital allowance. Okay, so having setting all these against your adjusted profit, then you arrive at your taxable income. You arrive at your what? At your taxable income. Okay, on which you therefore what? Charge your company income tax, your appropriate company income tax. Okay, so if you are a medium-sized company, your appropriate company income tax is at 20%, and if you are a large size company, you apply 30% on your what? On your accessible profit. Are we together? Okay, so now let's take another concept, which is the tax yield. Okay, in this case, this is the return in form of tax revenue derived from the administration of tax on taxpayers. Like I said earlier, that in January 2021, the Federal Inland Revenue Service, while making its progressive report, said it has achieved 99% of its revenue budget. 99% of its revenue budget. Okay, what does this mean? It means that what? The tax revenue derived from taxpayers for the year ended 2020, okay, or for tax accounting year 2020 is what? Is 99% of the budget of what? Of the budget. Okay, so that's the tax yield. That is all taxes collected from both individuals and companies, okay, by the Federal Inland Revenue Services, or the State Inland Revenue Services, or the local government tax administration, as the case may be. Are we together? So also we have tax rates. This is described as the burden ratio, usually expressed as a percentage at which a business or person is taxed. For example, under the value-added tax rate, we have 7.5% chargeable on what? On valuable goods and services. Are we together? Okay. Also, we have withholding taxes. Okay, so withholding tax at 10% depends on what? Depends on the types of transaction. okay, dependent on the type of transactions. For instance, if you are a consultant and you are rendering a professional services, if the professional services being rendered is carried out by an individual or a business name or business enterprise, as the case may be, or a partnership business, the applicable withholding tax rate is at 5%. Is at 5%. However, if you are discharging your professional services through a limited company, through a limited liability company, the applicable withholding tax rate is 10%. Okay. However, if these professional services is being carried out by non-resident companies, which there's a double taxation agreement between the resident company, between the non-resident country and Nigeria, okay, the applicable withholding tax rate will be 7.5%. We together. Okay, now let's take the tax incident. In this case, it is an economic term for the division of a tax burden between buyers and sellers. It does review the person that will pay the tax liability. Okay, so a good example is the direct tax and the indirect taxes. Okay, so under the direct tax we have the personal income tax, the company income tax, and the likes, and under the indirect taxes we have the value-added tax, the stamp duties, and so on. Together. So, for instance, if the government decided to impose an increased tax rate on cigarettes, the producers may increase the sale price by the full amount of the tax. Okay, so what's the applicable tax type here? Okay, so in this instance, the tax type here is an indirect tax. Okay, yes, that is not the tax burden is not on the manufacturer, rather is not on on the wholesaler or the retailer, but on the final consumer. Okay, so if you like, keep taking cigarettes. Okay, so now if the consumer still purchase the cigarette on the same amount after the price has been increased, okay, or increases, it will be said that the tax incidence fell entirely on the buyers. Are we together? Now, next we have the tax burden. This is the amount of income. Property or consumption tax levied on an individual or business. It is the amount of income or property or consumption tax levied on an individual or business. So tax burdens vary depending on a number of factors, including income level, jurisdiction, and the current tax rate. Okay, prior to the signing of the Finance Act of 2019, the Principal VAT Act, okay, the applicable rate under the Principal VAT Act is the 5%. Okay, but subsequently, from the day the Finance Act of 2019 have been signed into law, the VAT rate is 7.5%. Okay, so another type of tax concept we have is tax impact. Okay, so this is the effect of a tax on the production or consumption of the product being taxed. For example, the tax impact of raising the levy on tobacco might be a reduction in tobacco sales. Okay, now it's just like asking, what is the impact of the Finance Act of 2019 on doing businesses in Nigeria? Okay, on doing business in Nigeria. Yeah, to some people it is good, it is encouraging, it is fair. Okay, but to some other people it is bad for them. Okay, because during that same year we have COVID-19, which obviously disrupts business activities, except for small business. Okay, except for few. Okay, except for few who are not drastically affected by the pandemic. Okay, so you can imagine companies operating within the aviation industry, or is it the agency of these airline companies we want to talk about? Okay, so there are a lot of restrictions banned by governments of different countries, different nations. Okay, if you are traveling from this country to another country, these are the few things, these are the conditions. So if you are good with those conditions, good and fine. So if it doesn't, if you are not okay with those conditions, then you stay at your home. Okay, you stay at home. So that's an example. Okay, so if you are to measure the tax impact, you measure the tax impact on what? On an individual or company, as the case may be, or on what? On the subject, on the tax subject. Okay, so for instance, when the VAT rate was reviewed from 5% to 7.5%, the effect, the impact is that what? It increases the cost of goods and services in the market. Are we together? Now let's take the tax shift. This is also referred to as tax swap, and it is a change in taxation that eliminates or reduces one or several taxes and establishes or increases others while keeping the overall revenue the same. Are we together? So it is a change in what? In taxation that eliminates or reduces one or several taxes and establishes or increases others while keeping the overall revenue the same. Yes, like I said earlier, in the Finance Act of 2019 as well as 2020 respectively, yes, tax incentives were introduced to some sectors, and why that of some sectors were withdrawn. Okay, take for instance the agricultural sector, the real estate investment sector, okay, the insurance sector, okay, receive some incentives, have some incentives to them. Okay, take for instance for agricultural sector, any companies operating within what? Operating within the primary what? The primary production of agriculture in the agricultural industry are entitled to pioneer status. Are entitled to what? To pioneer status. Hitherto, these incentives is nowhere to be found. Okay, it is not existing. Okay, so also under the Petroleum Profit Tax Act, the withholding prior to the enactment of Finance Act of 2019 and 2020 respectively, withholding taxes are exempted from what? From income or profit or dividend shared from petroleum profit for petroleum profit investment, particularly for companies operating in the upstream sector of the petroleum sector. Okay, but now this incentives is no longer there. Okay, this incentives is no longer there. It's no longer available. It has been withdrawn. The section has been deleted. So companies, any profit or dividend shared or distributed by a petroleum company operating in the upstream sector will be chargeable to withholding tax. Will be chargeable to withholding tax. Likewise, under gas utilization, for companies operating in the downstream sector of the petroleum industry, there's deletion of some section. Okay, there's deletion of some section, that is of some incentives. Okay, for instance, the capital reliefs, the investment allowance reliefs available for companies operating within these sectors has been reduced. Okay, so that is a shift. Okay, is a shift, that is changes in one sector, okay, of the economy to another sector. So it's just to encourage investors in that particular industry too. Okay, so in the 1980s, in the 1990s, okay, so petroleum industry has been a boom sector for investors. Okay, it has been a boom sector for investors. Okay, but now that the revenue generation from this industry or from this sector of the economy is now is diminishing. Okay, is diminishing. So government has to look forward and look into into other sectors in order to maximize its revenue generation altogether. So now let's take the tax effect. This is a general term that describes the consequences of a specific tax scenario with respect to a particular tax paying entity. Yes, when the government signed the Finance Act of 2019 into law, companies and individuals are advised to go and review their business activity, to go and review inward the effects of each of the amendments to the Principal Act of Taxation and the insertion of new section, as well as the deletion of some certain sections from the Principal Act of Taxation. So take for instance, under the Finance Act of 2019, we have the earnings before interest, tax, depreciation and amortization. Okay, so for some companies, yeah, they are not affected, okay, because they don't earn interest income. Okay, they don't earn interest income, and also they don't have finance costs. Okay, they don't have interest costs. But for some companies, especially companies that has debt, that finance its business activities with debt, okay, so it has effect on them. In what sense? Where their interest income, okay, could not be absorbed, okay, where their interest income could not be absorbed by their profit for the year. Okay, do you know the implication of that? The implication of that is that what you the tax the finance cost will be reduced to 30%. The finance cost will be reduced to 30% of the earnings before interest, tax, depreciation and amortization. Okay, so then the unrelieved interest, okay, the unrelieved interest will be carried forward. Yes, what happens for businesses that were unable or that could not break even within their first 5 years of operations? Because in the Finance Act, it was stated that any interest cost, okay, any interest cost unrelieved for a period of 5 years will be deemed to have been relieved during that 5 years. That is what that means, is that it's a lapse at the end of 5 years period. Okay, so this is just the side effect, the negative impact of the Finance Act on the business activities of some companies. Okay, now let's move to another subtopic. Here we have the distinction between taxes and levies. Okay, now the definition of tax provided by the Nightingale 1997 can best be used to differentiate taxes from levies. Okay, now levies is quite different from taxes. Okay, like we discussed earlier, that taxes is a compulsory contribution imposed by the government, even though taxpayers may receive nothing identifiable in return for their contribution. They nevertheless have the benefit of living in a relatively educated, healthy and safety society, and safe society. So from this we can affirm that tax is not levied in return for any specific service rendered by the government to the taxpayer. However, levies are paid to the government in return for specific services by government to the taxpayer. Yes, take for instance, if you have a billboard, okay, you need to pay what? You need to pay to the state or the local government, as the case may be. Okay, if you have a sign, if you have a signboard, okay, before you can mount your signboard in a particular place, you have to pay to the local government or the state government, as the case may be. Are we together? Okay, so if you want to do a street party and you intend to block the road or to block the street, you need to pay to the state or the local government, as the case may be. Okay, so yes, you are paying this levy for for a specific service rendered for a specific benefit. Okay, in return, you are paying this levy in return for a specific benefit. For a specific service rendered by the government. Are we together? Okay, unlike taxes, yeah, people are complaining, yeah, why should we be paying tax? After all the taxes we have been paying all this while, we are not getting benefits from the government, we are not getting anything or returns from the government. Yes, that's true, because the payment of taxes does not make it mandatory okay, does not make it mandatory or necessary for the government to give anything in returns to the public. Okay, so it's not necessary that because you are paying tax, yes, you should get this, you should get that. No. Okay, so that's taxes for you. But unlike levy, when I pay for a particular service, yes, I must get the benefit from my payment. Okay, I must get the benefit for my payment. So for example, a fee such as a court fee is a payment to defray the cost of the service undertaken by the government, primarily in the public interest, but conferring a special advantage on the taxpayer. So another form of levies is fines and penalties payable to local government or states. So this is not imposed to collect revenue, but serves as a punishment for those who go against the laws of the land. Okay, so for instance, if you break the traffic rule, you pay fines. You pay fines. If you dump refuse where you should not dump where you should not dump it, okay, you pay a fine. Are we together? So if you can't urinate anyhow in the public, okay, so there are designated places where you can do that. So if you should do where is not appropriate, okay, if you should do that where not appropriate, then you shall be subject to fines or penalties, as the case may be. So a good example here is that of a traffic offender. So it follows therefore that while all forms of taxes can be described as levies since they constitute imposition, not all levies can be properly described as tax for the purpose of illustration. While the tax imposed by section 9 subsection 1 of the Companies Income Tax Act on profits of companies accruing, derived from, brought into, or received in Nigeria can be rightly described as tax. Okay, yes, this is under double taxation. Okay, under CETA, double taxation, that is for a non-resident company or a non-resident individual. Okay, so for government to bring them under the tax net, okay, so it has defined section 9 subsection 1 of the Company Income Tax Act as what? As charging that any income, okay, brought to, derived from, accruing, received in Nigeria shall be subject to what? Shall be subject or chargeable under what? Chargeable to tax under the Companies Income Tax Act. Are we together? But for penalty and fine imposed by section 85 of the Company Income Tax Act, okay, this can be best described as a levy and not tax. Okay, yeah, what was the penalty and fine imposed by section 85? Where a taxpayer has default to pay its taxes as at when due, or where a final assessment, okay, is what is sent to the taxpayer, and the taxpayer fails to pay within the due date, okay, fails to pay within the due date, then the taxable amount shall be subjected to a penalty at 10%. Shall be subjected to a penalty at 10% plus the CBN the CBN interest lending rate, the CBN lending rate. So if the CBN lending rate at that time is 19%, then it is 10% plus 19%. So it depends on it depends on the current CBN interest rate or lending rate as at the time the taxpayer defaults to pay its taxes as at when due. Okay, so now let's take the principles or canons of taxation. Principles or canons of taxation. Are we together? Now, yes, I give it a code, PAC-SEF. Okay, I give it a code which can be called PAC-SEF. Okay, yeah, you can also come up with your own code. Okay, but to me, yes, this is what I can easily remember. Okay, now according to Adam Smith in 1776, he puts forward the underlisted characteristics of taxation. Okay, so which can also be referred to as the canons of taxation that a modern tax system should have. One of these is the equity. Okay, one of which is equity. Yes, the principle of equity affirms that every taxable person should be taxed according to his ability. Every taxable person should be taxed according to his ability. Thus, the rich should pay more while the poor pay less. Are we together? The rich should pay more while the poor pay less. Yes, we can say that this is in line with the words, or this is in agreement with the objectives of the graduated words of the progressive tax system. Okay, of the progressive tax systems, which is also what we have under our Personal Income Tax Act. Okay, we have the graduated rates like we have demonstrated earlier. Are we together? Okay, so also we have the principle of certainty. We have the principle of certainty. Yeah, the time of payment, the manner of payment, the amount to be paid should be certain and clear to the taxpayer. The determination of tax liability should not be left to the whims and caprices of the tax officials. Yes, I think this is why we have an act that governs each of the type of taxes we have. Okay, so under the proportionate tax, under the progressive tax, regressive tax, and the likes. So we have the company income tax, we have the personal income tax, we have the petroleum profit tax act. Okay, so also we have what? We have the personal income tax, we have the petroleum profit tax, we have the capital gains tax. Are we together? So, and under the what? Under the indirect taxes, we have what? We have the value-added tax, we have what? We have the withholding, we have the value-added tax, we have the stamp duty tax, we have the custom and excise duty, and the likes. Are we together? Okay, so that's certainty for you. So a taxpayer should know, okay, that this is what I'm liable to pay, not just as the whims and caprices of us, of some tax officials. You know, you are not part of my business, so you can't just tell me with your discretion that go and pay this so amounts as your taxes. Okay, no, I should know the basis of what, the basis of your computation, how you have arrived at that what, at that amount. Okay, now another principle is what is the principle of convenience. Yeah, the social and economic standing of the taxpayer must be taken into consideration. Thus, the time of payment should not inconvenience the taxpayer. Yes, in fact, as a follow-up to the principle of convenience, we have in our tax law where a taxpayer is unable to pay his tax liability at a one-off. Okay, yeah, you can pay it instrumentally. Okay, so you can pay it instrumentally. Yes, and this is applicable under what? Under most of the tax acts. Okay, under the company income tax act, under the petroleum profit tax act, under the, so you can what, you can pay under the capital gain tax act. So you can what, you can pay your tax instrumentally. Are we together? You can pay your tax instrumentally. Yes, and at the end of your, for instance, if you have to pay your taxes 4 times, okay, if you have to pay, let's demonstrate that if you have to pay your taxes 4 times, if you have to pay your taxes 4 times, so in this case, let's say that your total tax payable is so if your total tax payable is say 100,000 naira, okay, if your total tax payable is say total tax payable is say 100,000 naira, and you have agreed that you pay your tax 4 times. Okay, so your first installment at 25,000 naira is due on 31st March 2021. Okay, or 2020. Let's take 2020. Your second installment at 25,000 naira is also due on 30th June 2020, and your third installment at 25,000 is due on 30th September 2020, and your final installment at 25,000 is due on 31st 12th 2020. Okay, so where a taxpayer failed to pay the final installment as at 31st 12th 2020, okay, so the balance there too will be subject to a penalty, okay, of 10% plus the prevailing interest or the CBN lending rate, okay, as at the time of default. Okay, so if you are now paying your tax today, 30th January 2021, okay, so the balance there too, which is 25 million, which is deemed to have been paid by 31st 12 2020, will be subject to penalty plus interest. Are we together? Yes, because the government has made it easy for you to spread your tax liability evenly or using some other means, as the case may be. But the primary objective or the purpose is just for you to ease the burden on you as a taxpayer. Are we together? Okay, we are moving forward. Now let's take the next principle, which is the principle of administrative efficiency. Yeah, the process of levying and collection must be administrative efficient, transparent, and must not cause economic distortion to the taxpayers, and must not cause economic disruption to the tax and distortion or disruption to the taxpayers. Yes, the way and manner of which the administrator of taxes goes after taxpayer should be lenient, should not be discouraging, okay, should be with cautious, okay, should be with cautious and respect, okay. So they should not be using there should not be autonomy, okay. Yes, because without the taxpayer, no government, okay, and without the payment of taxes, who will pay for their salary, okay. So, and also the taxpayer should not also see themselves as owners of the government, okay. So is like both sides should have courtesy for each other, okay. Like a balance that respect is reciprocal, okay. So the administrative of taxes should be fair, should be transparent. Tax administration should be accountable for their administrative processes. Are we together? So now the next principle is the simplicity principle. Yeah, this system should be the system of collecting taxes should such that it's simple so the principle of simplicity okay, so the principle of simplicity is thus that tax system should be such that it's simple to understand by the tax payer. Yes, the tax administrator, okay, should also enlighten taxpayer, okay. The tax administrator should enlighten taxpayer on the administrative processes when they are expected to pay their taxes, what are the applicable tax rates, what are the transactions that are subjected to tax, what are the transactions that are exempted from taxes, okay. So this should be in place in order to make the administrative process simple. Are we together? Okay. So now, okay. So now another principle of taxation is the productive principle. The tax system should be such that brings in sufficient revenue to the government. Okay, should be such that brings in sufficient revenue to the government. Yes, our tax laws must also be structured in such a way that incentives introduced to taxpayers will not have an adverse effect on the revenue generation of the government. So also the revenue generation of government, the objectives, okay, or the motive for maximizing the revenue generation of government should also not be to the disadvantage of the tax payer. So the cost of administering the tax should be less than the revenue such tax we generate. Okay, yes, the administrative cost should also be minimal, in as much as the purpose of taxes will be achieved. In other words, the costs and benefits should be measured, okay, so as to achieve the purpose of which tax system is stated for. Are we together? Now let's take the flexibility and stability principle, which is the last principle we have here. Okay, now here a good tax system should be flexible enough for changes to be effected. Should be flexible enough for changes to be effected by any government of the day. Okay, so this flexibility, however, must be balanced with the need to have a stable tax system. This should be balanced with the need to have a stable tax system. Now let's move to the sources of Nigerian tax laws. Sources of Nigerian tax laws. Are we together? Okay. Now the tax system in Nigeria is administered through statutes rather than common law. It is administered through what? Through statutes rather than common law. So the sources of Nigerian tax laws are: one, we have the customary laws. We have the customary laws. So these are the native laws and customs governing the taxation of incomes, goods, and properties of persons or communities within an ethnic group. Yeah, such as the Shakole, Osusunku, Zakat under the Islamic law. So examples of taxes collected under the customary laws are Ishakole. Yes, this is payable in Yoruba land to titular heads of communities or obas on the produce from farmland. On the produce from what? On the produce from farmland. Okay, so there's also another Ishakole, okay, on what? On landed property. Okay, on landed property. If you purchase the land, okay, if you purchase the land from the urban council or from the community heads and the likes, okay, they are entitled to some fee. They are entitled to some levy. Okay, so it is popularly known as what? Owole. Okay, so you pay them their rights, otherwise you won't be allowed to erect or to construct any object on that land. Are we together? Okay, so and then in the eastern part of Nigeria we have Osusunku, which is also known as the Shakole. Are we together? Then under the Islamic law we have Zakat. Zakat is a form of tax payable by adherents of the Islamic faith on their wealth which has been in their possession for a full year. Okay, which has been in their possession for a full year. Such wealth includes money, properties, etc. Okay, so it depends on what you have as income. Okay, so if you have a real estate, okay, if you have a real estate, the building, okay, so it depends on your objectives. Okay, so if your primary business activities in that, or if your activity in that real estate is selling of landed property, okay, so if you are paying your zakat, so you use what? You use the building. Okay, so the building will be what will be used as what? So for instance, now you have more than 100 buildings and which worth hundred of millions. Okay, so if you are paying your zakat, you take a percentage of the building in what? As a payment of your zakat. Okay, but if the property you have is not for sale, if they are for letting, okay, okay, so income from this letting will be used in paying your zakat, in as much as the income meets and exceeds the threshold of zakat. Okay, so if the income from this leasing or letting exceeds the zakat threshold, then you pay zakat on your income. Are we together? At the end of 1 year. So the Islamic law provides the basis for determining the amount of tax payable and to whom such tax is payable. Are we together? Okay, so another sources of the Nigerian tax laws is the statute laws. So yes, in fact, still on the customary laws, this Ishakole, in fact, a good example in Lagos State is the land use charge. Okay, so because all land belongs to the federal government, or is the government property. Okay, so you pay land use charge if you are residing in Lagos, and this is an annual fee payable to the state government. Are we together? Okay, so that's that. Now we have also statute laws. These are law or tax legislations passed by acts of the national and state assemblies and bylaws by local government authorities in a democratic government, or decrees or edicts under a military government. These legislations confer necessary powers on the taxing authorities to impose taxes on the citizens, that is, individuals, companies, trusts, settlements, etc. And a good example of such tax legislations is the Personal Income Tax Act Amendment of 2011, the Companies Income Tax Act as amended 2004, the Petroleum Profits Tax Act as amended, and also we have the capital gains tax. Capital gain tax. Also we have the Petroleum Profit Tax Act. Okay, so and recently we have the Finance Act of 2019 and that of 2020 respectively. So in this case, sections of this act are mandatory. Okay, sections of this act are mandatory on all taxpayers, are applicable on all types of taxes payable by taxpayers. Are you together? So also Nigerian tax laws are derived from case laws. Okay, and this is the doctrine of stare decisis, that is judicial precedent. Under this doctrine, judgments pronounced by superior courts of records, namely high courts, appeal courts, and the Supreme Court on principles of tax laws and their interpretations of the provisions of the statutes are binding on all lower courts. Yes, usually in practice, we have a lot of references. Okay, so if you browse or Google search case laws or tax case, okay, so you see a lot of companies cases with the Federal Inland Revenue Service versus taxpayer. Okay, a lot. So where taxpayer have a dispute with the tax authority, okay, so the taxpayer might drag the tax authority to the court. So at times it starts from the tax tribune. Okay, it starts from the tax appeal tribunal. So from the tax appeal tribunal to the High Court, to the Court of Appeal, and then to the Supreme Court. Okay, so if you see the case of Lagos State LIRS versus taxpayer, okay, if you see the Attorney General Federation versus the Attorney General for states, okay, there are a lot of case law. Now the decisions, okay, the decision from this doctrine, from these superior courts are mandatory, are binding on the lower courts. Okay, so in view of the fact that Nigerian tax laws are their origin from the English tax laws, it would not be out of place to state that the principles of English common law pronounced upon by the judges in England and interpreted by them also form another source of Nigerian tax laws. Okay, so this position is buttressed by the decision in the case of Aderawo's Timbers Trading Co. Limited versus the Federal Inland Revenue Service Board 1966, wherein it was held that the decisions of English courts can be invoked for the purpose of interpreting Nigerian tax statutes where the expression and terms used are similar and substantially the same as those used in English statutes. Are we together? That is, you can borrow from what? You can borrow from English common law. The pronunciation, the interpretations of English tax laws are also part of the Nigerian tax laws. Are we together? Okay, so in fact on the case laws we have a lot of court cases, decision reached by the tax appeal tribunal, decision reached by the Federal High Court, decision on some dispute areas. Okay, so when there is dispute between taxpayers and the tax authority, so where this dispute can be resolved are either the tax appeal tribunal, the courts, okay, so and some other means. Are we together? So now also another sources of the Nigerian tax law is the circulars issued by and practices of the Inland Revenue Service. Yes, last year the Federal Inland Revenue Services issued more than 5 circulars, more than 5 circulars on clarification of VAT in the Finance Act, clarification of this in the Finance Act, clarification of that in the Finance Act. Are we together? Okay, yes, the purpose of this is part of the ease of doing business. Okay, simplicity in the administration of taxes, by simplifying the section of this Finance Act, bringing into the understanding how it will be administered by the Federal Inland Revenue Service. So it's part of the administrative efficiency of how these taxes will be collected. In the clarification on VAT, okay, so there were a lot of illustration. There are some illustration explaining how particular section of the Finance Act will be applied. Okay, so how it will be administered. Are we together? Okay, so these circulars are also what are also binding, as they also form part of the what of Nigerian tax laws. So in some cases they can be made or they can be used as what as references in what in your correspondence. Are we together? Okay, so or in making decision. Another sources of the Nigerian tax law we have is what is opinions of tax experts and authors, insofar as the court take judicial notice of them. Yes, like my oga, okay, at the top we have Mr. Taiwo Oyedele of PwC. We have Mr. Taiwo Oyedele of PwC. He's an expert in tax. We also have Mr. Yomi of Deloitte. Okay, so and many more. Okay, so we have the Banwo Igodalo. We have a lot of tax experts. Okay, so and also we have a lot of authors. Okay, we have authors. So now, yes, because of the significance of their knowledge, their impact, their activities. Okay, so because their activities in that industry, yes, when governments or when the Committee of Tax Policy and Reforms were about to make some amendments or were about to carry out like in the Mr. Taiwo Oyedele is one of the member of the Reform Committee or the Progressive Reform Committee on Finance Act. Are we together? So yes, their knowledge is required, their contribution is required as part of what. So in order to what, because they represent the public, they represent what, they represent the consultants, because the consultants are what are representative of the taxpayers. Okay, and as well they are also like the middlemen, okay, between the tax administrator and the tax payer. Are we together? So also we have the budget and pronouncement of relevant ministries, and also we have the Constitution of the Federal Republic of Nigeria. Are we together? Okay, now let's discuss multiple taxes. Okay, so under multiple taxes we have nature of multiple taxes. Now this is a tax regime under which various and similar types of taxes are imposed on taxpayers by different tiers of government. In other words, it can also be taken as what, as a double taxation. It can also be referred to as a double taxation. Are we together? So for instance, why the federal government impose the Value-Added Tax Act or the Value-Added Tax on consumption and make it applicable throughout the federation? Some states, notably Lagos State, introduced the sales tax based on the same principle as the former and made it applicable in Lagos State. In fact, we have the hotel and restaurants and consumption taxes. Okay, so this tax amounts to double taxation. Some years ago, taxpayer filed a case in the court, okay, against the tax authority, that they are paying value-added taxes on consumption. Okay, I'm referring to taxpayer in the hotel and restaurant and in the hospitality industry. Okay, so they pay value-added tax on consumption. on their sales tax, on their sales, why should they be paying what? Be paying consumption taxes as well? Because to them this amounts to what? This amounts to double taxation. And the decision of the court, the court then was that what? Was that yes, under the what? Under the 1999 constitution, okay, the 1999 constitution grants what? Grants states the autonomy to what? To charge taxes under what? Under the taxes and what? Taxes and levies act of what? Of the 1999 constitution, okay. Yes, so and the 1999 constitution supersedes, okay, supersedes what? Supersedes the Value Added Tax Act. Since the Value Added Tax Act is what? Since the 1999 constitution, it has what? Has power over the what? Over the Value Added Tax Act. Therefore, the Federal Inland Revenue Service should not what? Should not collect value added taxes from what? From hotels and restaurants in what? In Lagos State, okay, because Lagos State has the right to enforce, okay, to enforce the what? The collection, okay, of taxes on consumption, okay. Now, particularly guilty of the problem of multiplicity of taxes are the local governments, where all kinds of taxes were introduced. In fact, we have the entertainment tax, road tax, permit for closure of streets, road permits and the likes, refuse collection, market taxes and levies, and also we have loading and offloading levies, okay. So all these are what? Are types of multiple taxes. Now let's take the collection of multiple taxes. Yeah, the greatest problem of multiple taxes is that of its enforcement and use of unorthodox collection procedures and method. Some of these procedures methods are what? Are one, mounting of roadblocks, use of revenue agents or consultants. In fact, and the means of collecting these multiple taxes are what? Are discouraging. They are what? They are discouraging because, in fact, for instance, under the mounting of roadblocks, collection agents mount roadblocks and put spikes on the road to force motorists to stop at the approach to the roadblocks, okay. So they demand from the motorists evidence of payment of taxes, maybe for instance permits, rider permits, riders what? Riders permits, okay. So if the motorist is unable to provide them the what? The evidence of payment of these levies, and in the course of carrying out their function, they might impound the tires of what? Of the motorist. Some at times, in fact, at times they go to the extent of what? Of breaking the side mirrors, or vandalizing a lot, some the spare part of the motorist, okay. So at times they rough handle the person, maybe the driver, as the case may be, because they are unable to pay the taxes. Are we together? So because the guy is unable to pay the taxes or levies they are demanding for, okay. So as such roadblocks on the spot, they do a lot of things, all sorts of things that are uncalled for. Are we together? So such nuisance seriously affects intercity commerce and slows down economic activities to the detriment of the country. Are we together? Okay. So in fact, another example is the road union, okay. So this set of people contributes to the hardship, contributes to the difficulty of getting of means of transportation, okay, of getting transportation to either to your place of work, to an event, to any whatever, okay. So you could imagine the amounts of levies they collected from the motorists at each bus stop, okay. So they have their branches, locations and the like, okay. So and you see these drivers complaining
mo ti fún ẹ lówó tẹ́lẹ̀ now, I've given you money now, why are you stopping me? I've paid you this, I've paid you this, I paid you the morning, I paid you in the afternoon, now this is the, now you are coming out this evening to collect money from me again, why should I pay you? I've given you a Ghana. And the other party start, show share ni, I know for me lowo jo, give me money now, are you mad, are you crazy, give me money. So using what? Using unconscious words, of using collecting money in a nuisance way, enforcing payments, or offending the drivers. You know, if the driver is not careful enough, they in fact they will beat him to hell. And at times these are done in the presence of what? In the presence of the law enforcement agency. So something should be done in this case. Now, another means of collection is the use of revenue agents or consultants. So the use of revenue agents or consultants was popular with what? With the state and local government tax authorities. Yes, especially the local government tax authorities. If you are driving along Mushinojuwoye axis, if you are not careful, if you should break the traffic lights rules, if you break the traffic rules, these revenue collector agency, the way and manner they will maltreat you, the way and manner they will, in fact, you will see them with planks. You will see them with planks. So that is, they are telling you, they are showing you that if you misbehave here, you will be dealt with. Okay, so we are in a civilized world. Why should we be seeing these in this type of world at this time? Okay, so the use of revenue agents or consultants, they need to be oriented. We are human beings, we are not animals. We are human beings and not animal. Okay, so some of these things are no longer existing in some other part of the world. In fact, they are not feasible. You can't see something of such. Okay, so the use of revenue agents or consultants, which was popularly in use by the local government authorities, okay, is a means of collecting taxes due to them. So while some state tax authorities employ external tax consultants for their audits, assessments, and collection of tax under the accelerated revenue generation programs, okay, yes, an example to that is the TAMA. Okay, the TAMA are employed by what, or engaged by some state inland revenue. Okay, so they assist with in discharging some parts and some functions of the revenue authority, such as audit, assessment, and collection of taxes. Okay, so also at the local government level, we have the joint revenue association. Are we together? So now, what's the solution to this multiplicity of taxes? Okay, now the federal government's solution to problem of multiplicity of taxes is in 1998, okay, there's a promulgation of Act 21, which cited taxes and levies applicable to be collected by each of these arms of government. Okay, so following the outcry of the citizenry to the problem of multiplicity of taxes, especially its unorthodox collection procedures, the federal military government of Nigeria intervened by the promulgation of Act 21, which was cited as the Taxes and Levies Approved List for Collection Act 1998. Okay, so the purpose of the act was to resolve the confusion created by the multiplicity of taxes imposed. Okay, to resolve the confusion created by the multiplicity of taxes imposed by the three tiers of government, namely federal, state and local government. Okay, and then local government. So it lays down in a very clear terms the types of taxes collectible by each of what, by each tier of government. Okay, so we have the 1999 constitution. Okay, we have the 1999 constitution. The 1999 Constitution of the Federal Republic of Nigeria seeks to eliminate multiple taxation at all levels of government as provided for in Part 2, Paragraph 7 to 10, which states as follows. Okay, 1. We have the exercise of its powers to impose any tax or duty on 1. Capital gains, incomes or profits or persons other than companies, and 2. Documents or transactions by way of stamp duties. So in this case, the National Assembly may subject to such conditions as it may prescribe, subject to such conditions as it may prescribe, provide that the collection of any such tax or duty or the administration of the law imposing it shall be carried out by the government of a state or other authority of a state. Okay, shall be carried out by the government of a state or other authority of a state. Okay, so also we have B, where an act, so paragraph B states that where an act of the National Assembly provides for the collection of tax or duty on capital gains, incomes or profits or the administration of any law by an authority of a state in accordance with paragraph 7 thereof, it shall regulate the liability of persons to such tax or duty in such manner as to ensure that such tax or duty is not levied on the same person by more than one state. And the subparagraph C states that a House of Assembly may, subject to such conditions as it may prescribe, make provisions for the collection of any tax, fee, or rate, or for the administration of the law providing for such collection by local government council. Then the subsection D states that where a law of a House of Assembly provides for the collection of tax, fee, or rates, or for the administration of such law by local government council in accordance with the provisions hereof, it shall regulate the liability of persons to the tax, fee, or rate in such manner as to ensure that such tax, fee, or rate is not levied on the same person in respect of the same liability by more than one local government council. Are we together? Okay, so now the objective of the 1999 Constitution on multiplicity of taxes is to what? Is to eliminate, okay, it is to what? Is to eliminate multiple taxation at all levels of government, as what? As provided under Part 2, Paragraph 7 to what? 7 to 10, which has been which we have here. Okay, now like I said that for instance under subsection A, that's paragraph 7, in the exercise of what? Of the power imposed. Okay, now capital gains, for capital gains we have capital gains arising from companies and capital gains arising from individuals. Okay, so capital gain tax on company will be payable or paid to the Federal Inland Revenue Service. Okay, because the administration of Company Income Tax Act is vested in the Federal Inland Revenue Service.
which is an agency to the what, to the federal government. Are we together? While capital gains tax payable by individual will be collected and administered by what? By the State Inland Revenue Service. By who? By the State Inland Revenue Service. Okay, so take for instance, if you have an asset and the asset was sold for a consideration. Okay, so now if the cost of the asset is say 10 million naira, okay, and the sales proceed realized from the sales proceed from the sale of the asset is 15 million. Okay, so the difference is what? Is 5 million naira. Okay, which will be subject to capital gain tax. Okay, so at what? At 10%. Okay, so 10% of 5 million is what? Is 500,000 naira. Okay, now the asset being owned by what? By an individual. If the asset is owned by an individual, okay, now the payments of the capital gain tax in this regards will be made to what? Will be made to the State Inland Revenue Service. Okay, for example, if the individual is a what, or is, yes, if the taxpayer is a resident of Lagos, okay, then it will be payable to what? To the Lagos State Internal Revenue Service, LIRS. Are we together? Okay, so however, if the asset is owned if the asset is owned by a company, okay, not a business name or a business enterprise company, okay, a company in this sense is a limited liability company, a private company, or a public company, as the case may be. Okay, so the capital gain tax arising from what? Arising from their transactions, that is the sale or the disposal of an asset where the primary business activities of such company is not disposal, is not what? Is not sale of property. Okay, then such sales proceed, the difference, that is the gain from such transaction, will be subject to capital gain tax under the Capital Gain Tax Act of 2004 as amended. Are we together? So this is a typical example of what? Of the 1999 Constitution, that is the purpose, the objective. Now also, where an act of the National Assembly provides for the collection of tax or duty on capital gains tax, like I've just demonstrated, okay, so the incomes or profit or the administration of any law by an authority of a state in accordance with the paragraph 7 thereof shall regulate the liability of persons to such tax or duty in such manner as to ensure that such tax or duty is not levied on the same person by more than one state. Okay, now still on this example, if the Lagos resident is however working in Ogun State, if he's working in Ogun State, okay, but the asset that was sold was in Lagos, the guy is a resident of Lagos. Okay, so under the joint tax board, okay, the two state authority, okay, so must ensure that the income derivable from the sale of that property is not also subject to tax in another jurisdiction. Okay, in another jurisdiction. So in this regards, a receipt should be presented. A receipt should be given to the taxpayer as an evidence of paying such tax. Okay, and also as an evidence of collecting such tax from the tax payer. Are we together? Okay, so and also if the taxpayer defaults, the tax authority also has the power. Okay, also has the power to impose, okay, to impose any liability such as a penalty and interest, okay, on such levy. Are we together? So subject to such conditions as it may prescribe, make provisions, that is the state also makes provisions for the collection of taxes, fee or rates, or for the administration of the law providing for such collection by such governments, okay, by local government council. Yes, for local governments,
the local government tax administrator also has the responsibility, also has the power, okay, to go after taxpayer, okay, such on collection of levies on billboards, street names, local rates and levies for market rates, okay, refuse rates and the likes, okay. So the 1999 constitution has splitted, okay, the types of taxes to be collected by each of these governments, each of these levels of government. Are we together? Okay, so we have come to the end of class today, and I have an assignment here for you, and the assignment goes thus: you have to discuss the history of Nigerian tax system in not more than 450 words. That is, you have to discuss briefly the history of the Nigerian tax system. Are we together? Okay, so if you have questions for me, I would like to address them one after the other, okay. And also the assignment is to be submitted before the next class, so make sure you are also advised to go through your notes before the next class, so that because our subsequent class, okay, premises on this first class, okay. So because the under our first class, we have discussed the principle of taxation, the multiplicity of taxes, the types of taxes, and the likes, okay. So I wish you guys best of luck as you study for your coming exam. You shall all go and excel. Good day.